Well, and doing great on this Thursday. Does look like Michelle look very strong. Excuse me. What was that? CTM. Good to be here with you all. Summer sessions in effect. Bitcoin trading at $117,700,000, and that is a mega bearish engulfing candle underway. No doubt about it. It's interesting, not Bitcoin related here, and I keep not wanting to check the seasonalities in so much as that they keep just playing out. But nevertheless, you could see that. You remember this session? I was like, oh well, we would not be surprised. Doesn't mean it's going to happen. Is it like just another gauge out there? Does it does provide some nice awareness. We said wouldn't be surprised, but I think I said the 15th at the time, and then we went back. We looked. Oh, it's between the 13th and 14th. If we were looking at the Nasdaq making an all-time high, higher than it is today, it was. And then I didn't say it yesterday. I wanted to say it yesterday. So there's often a lot of things that I want to say that I'm not able to get out in the time that we have together. I did mention yesterday specifically that we have Thursday's data. We have first week of September non-farm payroll coming again, and then we have more inflation data. And whether or not they're going to cut in September, that even though the markets right now are pricing that in strongly, even after today's inflation data, PPI, the markets are pricing that in strongly. Doesn't mean that it's going to happen, but I didn't get to share it with you, so I feel like I shouldn't share it now. But genuinely, I was wondering what it's going to be the trigger that kind of allows us to to pause off a little bit over here between now and the 22nd. And I was thinking in my head, well, I imagine it's probably tomorrow's PPI. That's nothing. That's just like whatever. But that's what happened. My concern is more along the lines of what happens coming into the end of September. I expect between now and then a lot of chop. You could see it in the 1998 cycle. You could see that chop between now and the end of September. And yeah, would we be surprised? Would any one of us be surprised if price is lower into the first few weeks of September than it is today? Absolutely not. It's coming out of here. It's as we move into October and November that I want to see price resuming up, and that right there will be a healthy sign for me. Those are my expectations of what is going to happen. Now, we have to be able to go ahead and take it as it comes. Could we say that we have further deterioration of hard data today with the elevated core PPI? Absolutely. Did we have deterioration of the hard data last non-farm payrolls? Absolutely. Is it enough to go ahead and change the expectations of the Fed cutting in September? There's a lot of data between now and then. So again, you all know before today's data, you all know my perspective on that is that it's way too soon to be figuring out what they're going to be doing in September. You know what? It's funny. People are like, as some people are realizing that, there could be an actual changing nature of the cycle. And I love that alignment right there. That's sick. But and they start talking now about, well, that means in 2028 after the halving, there's going to be a left translated cycle. I mean, talk about moving the pieces. I have no idea. That's so far in advance that I'm not able to make any type of assessment. I'm trying to look at what's happening before us right now. Now we could make early hypothesis. Hypothesis. What kind of English is that? Is English your first language, Jordan? We did in January of 2022 is when we first began theorizing about the changing nature of the cycle. It certainly seems to be coming to fruition. And well, I want that. You know what? That kind of leads into today's topic about the diminishing volatility that we're experiencing. And don't forget, I expect that we're going to see diminishing volatility on the downside. And I often talk about that in relation to the bear markets. I'm trying to get into some type of, I often talk about that in the bear markets, that we should going forward see that diminishing volatility that we saw even in the last bear market with the 76% drawdown, even with the blow up of FTX, Celsius, and BlockFi. And I don't think that I talk about the diminishing volatility on the upside enough. And there is, and it's expected to continue to be diminishing on the upside. And I'm just going to go ahead and just show this visual really quick. And you notice if you just, I can't use the pointer because I have this chart up, but if you, maybe I could like this. Nope, doesn't work. The way that I describe the upside price action from here, where we are in the ultimate market opportunity, is exponential growth, exponential gains. And that's exactly what it is. However, there is also at the same time diminishing volatility, upside and downside. It's why I don't expect any type of blow off into the September, October that a lot of people coming around to understanding what's been taking place on Bitcoin are looking for. However, there will be certain times of increased volatility. And we pointed out in yesterday's session. In yesterday's session, we were looking at what would happen if we come out of the sustainable channel and we break out to the upside. We expect that we would have accelerated price behavior. Then you're going to see upside volatility increasing during that period. And then even more so, because out of that upside elevated price acceleration, you're going to see a reversion to the mean. And then we said that, well, our drawdown will probably be in the range of 40 to 50%. And then you're going to see, volatility picking up, but not coming back to where it's been in the past. Let's go ahead and just take a look at that from a different perspective. I have a nice chart over here that's showing you the average true range, except you can't use average true range because obviously if you go back, 4 years ago and Bitcoin's trading at $10,000 to $20,000, it's a lot different than Bitcoin trading at $100,000. Or if you go back 8 years ago when Bitcoin's trading at 500, so you have to use average true range percentage. And average true range percentage is then able to, regardless of what the price was of the range, which is measuring the volatility, it's using it from a percentage based. And you can see right now a couple of different observations as you move into those accelerated upward blow off moves, or euphoric moves, I should say. You could see that Bitcoin's volatility is expanding, right? You could see during every single, this is a 50% drawdown over here, as you see that we had that like months long consolidation inside the descending triangle, and ultimately you can see the mega move up on the volatility as price came off down to the downside. Same thing during the lockdowns over here in March, as Bitcoin had that 62% drawdown in weeks. You could see that mega move up in the volatility. Or when Elon said that Tesla's no longer accepting Bitcoin payments, and you can see that massive move down in the massive volatility. But as you come into these heightened euphoric stages of the past bull markets, you can see that volatility is increasing the whole way up. Now, prior to that, we often look at this channel here in 2016 and compare it to where we are right now. There's a lot of similarities to them. The only difference is the length of this current one is currently longer. That's all. However, great to have you with us on the inside. Really appreciated that introduction as well. Looking forward to having you on team working with you. You could see that you have this channel over here, and during that channel, you could see the volatility was ranging somewhere between 8 and 2%, right? Or lower than 2%. About 1% is the low, more accurately about 1.5%, and 8% during this range over here. And it wasn't until it broke out to the upside that you started then seeing the volatility expanding, going above 8%, and ultimately as high as just above 14%. If you look at what's happening now, as we're in a similar channel, you can see that the volatility is different. It's not going as low as 1.5%. It's a 2% and 6%. So it was between 8% back there. Well, that's fine and that makes sense. Well, because why? Two reasons. We're in a very tight channel. And while we were in such a channel coming back over here in this area, you could see that volatility was certainly suppressed between that 8 and 1.5% range. And you could see that it spent a lot of time very low, down towards 2%. You could see this whole area over here for months down under 2%. And it's a very similar situation, except that instead of looking at candles that were, roughly $300 to $500, we're looking at candles now above $100,000. So you would expect that you would see that volatility decreasing down from that 8% candle, down to 6%. It seems healthy. It seems well within range. But what happens? This is the question. What happens if this area over here that we're experiencing now continues for the foreseeable future, in so much as that, well, Jordan, you're hoping, you're expecting that this sustainable channel continues to last basically for as long as possible, because once it breaks to the downside or upside, it's no longer sustainable, and you're going to see either accelerated price action to the downside, and or first the upside and then the downside, and when that happens, we're going to see volatility pick up. But my expectations are for even when that does happen, that's going to be limited, in so much as, let me go ahead and pull up a chart. I could actually be, and I gotta hide the prices, otherwise we're going to get some misunderstanding and snarkiness. This is a sustainable channel. And then when it breaks out to the upside, you have the reversion to the mean. You'll see volatility increasing, but it'll be short-lived. My expectations are it's short-lived. We don't see any of the upside extended volatility outside of any type of legislation or Bitcoin Act. And y'all heard that Treasury Secretary Bessent said, "Whoa, we have no plans on buying Bitcoin." He also said, don't forget, he said that they are not going to revalue gold to buy Bitcoin. They also said that they're going to audit Fort Knox. You know what? I want to just talk about this for 1 second as we're here right now. My understanding or belief is that we've seen a lot of executive orders that are highly favorable towards Bitcoin and crypto, and we need some laws passed, some legislation. That's not going to happen right now with a divided House, and the midterm elections are absolutely of critical importance if the current agenda is going to be taken any further. And there's not a chance, likely, of a Bitcoin Act being passed prior to control of both the House and Senate in the United States. If that happens, then likely there's the potential for that to happen. Rewinding it to Fort Knox, rewinding it to the passing of the House, there's an important thought there that is eluding me. So I'm going to come back to that in a minute, and I'm going to jump back over to here, because I was thinking about what would cause accelerated price action. And you all know, outside of what I call an adoption event, that's likely not going to happen, which is really good. And I have to be honest, I don't like seeing such a rejection that's taking place here today. I mean, as Michelle said, that's a strong rejection. I'm trying to find out where we are. A little all over the place today. A lot over the place today. I know you all are forgiven, and it's all good, but I guess we'll come back over here. This is where I wanted to be. It's a very strong rejection. I asked people yesterday, I was like, so, when was the last time you bought Bitcoin? And, a lot of people, it's been ever since the bull market started. And then you see a lot of people have been accumulating up over here. And I have to be honest, I think it's extremely healthy what's happening. It doesn't mean that there can't be a breakdown. We don't want to lose the retest that we've had, the breakout and then the retest. We don't want to lose that. And if we lose that, then obviously we all have further expectations of some pressure. Look, right now there's a lot happening. The resiliency of the market has been absolutely something else. But at the same time, we have seasonalities to contend with now, and obviously between the end of September, towards the end of September, we're looking at the amount of new issuances that have just been thrown up over here. It's a lot of money, and it continues as they're refilling the TGA, and as also they are funding the government, U.S. government, $1.6 billion, with the majority of being raised in September and October. And it's a headwind for liquidity. So it's a testimony to how strong the market is. I think that today's PPI is a rightful concern. And if you look at, it's the highest since March 2022. That does give Powell more, let's say, reason if he wishes to kind of stand pat to do so. And I think that there's a lot of variables at play. The concern for me, I suppose, is what happens next earnings seasons. And are we seeing actually some Lynn Alden like feels different. So, and I'm throwing that out there as a point of reference. So in so much as that she says that this does not reflect that companies are eating into their margins. My view is it's showing that companies are eating into their margins. Next earnings season now becomes the most important earnings seasons of the entire bull market. The 10 years seems to continuing to be coiling over here. And yes, it did not like today's price action. We're like expectations are nil right now, in so much as that my belief is this is going to continue to coil for some time. And if it breaks out to the upside, which I think my expectations have maybe subsided a little bit. I was very convinced that eventually we break out to the upside and higher than most people believe before ultimately having a sharp, strong revision to the mean. However, why inflation is certainly rising, I don't expect it that it's going to come close to coming out of control or elevated or a problem. I don't, and I would be very surprised if it does. So now we have obviously a lot of pressure out on the treasury market with all of the new issuances being offered. So you have a lot of supply. We haven't checked on the reverse repo in a while. I don't know if I have it up. I would like to if we do. I don't have it up right here. Um, so my expectations are that we continue to coil. If we break either way, that becomes an event, and then that becomes a place to make sure that you are positioned correctly. But I'm giving it just more time, and you can see not only has it been coiling, it's coming down now to a sharper. It's hard to imagine right now. Maybe tomorrow we find out that Japan's 30 years imploding, and it has spillover and carryover into the U.S. Treasury market. And that's what causes us to break to the upside. Or maybe we find out X, Y, Z. But right now, there's nothing that I see that is going to suggest that we're going to see a sharp move right now on the 10-year. Maybe the trigger is when they start cutting. Maybe when the Fed eventually starts to cut, that actually sends, obviously I think it's easier, longer term duration, 20-year, 30-year. I don't think that they're going to like that. And 10-year, last time they cut, it didn't respond well. What will happen this time? That remains a variable for me as well. This is, yeah. And at the same time, though, I'm grateful for it because two things. And it's not about being right or wrong. Do you see how quickly the fire turns into a bonfire? As we were seeing, obviously, I mean, Ethereum's been a runaway train ever since it imploded. And, people starting to see alts kick up. I think we saw calls for alt season. I wanted to incorporate that well into today's session. I wasn't able to. There's a lot for us to do each and every day. We try to do as much as possible. But listen, like the longer we have to accumulate Bitcoin, the better, and at the lower prices. So I I have to say it's welcomed. I hope we don't have any major technical breakdowns. Are you interested in what those would be? Because we haven't looked for a moment. So that would be horrible to experience a liquidity grab to the upside and then a breakdown. That's coming in below over here at like just above $98,000, below, let's say just below 100,000. That would be really welcomed, in my opinion, if that were to happen. Now, I prefer that we don't break below our breakout over here. The breakout was really down over here, though. CTM knows that this is upward sloping, and for sure it was a line of resistance. This line is I think, looked upon by a lot of people coming back over here. Well, I think our expectations are different. Let me try to get what other people are focused in on. So this should be pretty clear. Yeah, I don't see it. I don't know. I don't know what they're talking. I don't know. I don't know what I'm doing wrong, I should say, because anyway, I don't see it. Um, yeah, that doesn't work for me. But maybe I have something wrong over here. If someone could give me a better, I can't. I mean, I'm just connecting two lines. I don't see it. And even if I just get rid of the top and go to find the bodies over here, which I think that's more precise, I don't see it. Anyway, I'll stick to my own TA. And I don't want to break down below here. I also don't want to shoot up to 100 and you know what I'm saying? I'm happy for the opportunity for this to stay within the sustainable channel as long as possible. And I think it's good and healthy, but I don't think that this is Bitcoin related today. Obviously, I think this is market related, and it has a lot to do with the data just came out. We're still at an elevated level. But I don't like that rejection at all. And the reason I don't like it is because you took out the all-time high and then massive bearish engulfing. Still extremely healthy where we are right now at just below $118,000. Maybe it's on the 3-day. That could be the reason. Let's go ahead and just try one more time to find out. I don't see it. So I just don't see it. I can't make it work. That's, I guess there you go. That's what they're, it's not accurate. Is it accurate? See, there you go. If you take from the April high and then you come into here and these two touches, that works. Yeah, that works. Um, but that's definitely, that is not something that I would consider or consult as being of any significance and or importance. So there we go. Well, I would be surprised if we saw a 20-30% drawdown. Extremely surprised. And let's come back over here and apologize for the lack of flow today. It's all good though. Um, even over here, Robert and everyone, if you're looking at this is just historic seasonalities. It's just 100 years of data and just what has happened. Seasonalities is obviously not a strategy, but it is a gauge, and there is a reason why these things continue to rhyme a lot, right? So you got a lot of people consulting the 4-year cycle. Yeah, I just saw yesterday I saw on Twitter yesterday the two things I saw on Twitter. So this should be presented better. I think I'll have to wait on one of them. But one of them was the power law contours, which this is. Let me come back over and find it. And like this is the power law contours, and maybe not this one, but gives an example. And, people overlaying past, like, guys, is like, were you with CTM back in 2021? Nobody else in the space was doing anything remotely similar to that. And that's exactly what we were doing. And then when there was a major deviation, which there was a major deviation, we were like, boom, well, we're moving beyond that. And people are going to find out there's going to be a major deviation. Once again, this deviation is going to be illustrated like this, though. It's not going to come anywhere close to that upward price over here. We're not having a blow off in the next 2 months to 210, and that's what we'll find out. Appreciate you, brother. Appreciate every single one of you, and especially for the kindness. I have high expectations, and I like it when everything is going well, so that I don't want to leave anyone behind. Anyway, if you're new here, welcome. So if you look at, I'm looking at the blue line, which is the median, and you can see that that's 5%, right? I'm just looking at the 5% over here, and then the correction down to the end of September it's like a 3% correction. It's not really anything that would suggest to me that it's more of a chop, and it's not anything that would suggest that we should be worried. Now, is this over here something like, let's say that's at 8.5% down to 2%, like a 6% correction during the 1998 cycle? That's a 6% correction. And that, like, that's nothing except healthy for not only being able, ever since the April drawdown, to have ascended so high and quickly, to have some type of consolidation at this particular point, but we're also coming off of 2 years of back-to-back mega gains. It's why I could come over here and you could see that. Look what we've done to have any type of consolidation. Super, super, super healthy and expected. Like, there's not everything right with it. There's nothing wrong with it. Now it could become something like every single correction started with a small drawdown, and we might be a little premature in looking for a drawdown here, as we're looking at the Nasdaq trading at just off $24,000 all-time high this week. And there's not really much to read into. Where we have some problems, let's see. That's too far away, like, that's for a technical breakdown. So you can see from where we are today, it's only a 4% drawdown. It seems to be well within the reason of what we were looking for seasonalities and healthy. I wouldn't be surprised if we guys, we've been just triggering new all-time highs almost every day. Massive move up. Trying to see if we get, like, this looks like a better. I don't like the 5% there. I like this angle, this trend line better, just coming off of the support down over here. And, you know, would that be the first sign of a concern? It's very close. Same thing, about 4%. So extremely healthy. I'm just trying to see if there's any continuity over here. But yeah, so guys, the market is super healthy. It's looking good. I'm thankful that we're not going parabolic, because when we're going parabolic, it's suggesting that we are coming to actually a lot closer to a strong mean reversion for the market to go ahead and shake that off. And we just want to continue well with where we are. End of September is, alts. So, I mean, this is an alt season, which is okay and good. Doesn't mean that alts aren't going to outperform the dollar. A lot of people looking at Bitcoin being down right now and talking about the Bitcoin dominance. I know that before it fell down, I know on the breakout that we were watching of Total 3, at that particular point in time, we deferred down to Bitcoin dominance, and we said one of two things is going to happen, right? And like the day of the breakdown, all the way up, let's just call it just below 65%. We said, well, the first move should be down towards just below 62%, right? And then we said or 61%. And that was our first target, and that happened. And then we said, well, let's see if we have a bearish continuation pattern, or we kick back up. My expectations, and I was very clear with that we would have a bearish continuation pattern. That's exactly what happened. And then we hit the second target, or we're hitting into the second target right now. I have to go back to the video. I think the second target is down over here closer to 58. So that was all expected. I mean, not expected, but well within what we were planning out. And I don't see anything unusual about it whatsoever. But I only follow from afar, so I'm not gonna really sit here and talk about something that I wouldn't consider myself to be any type of offer any type of insight that's worthy. Um, but this is not yet alt season. Alts have been performing well. Let's go take a look quickly at our positioning. And we still see Ethereum, although getting rocked hard today. And Ethereum, you could see that it was kind of neat how it came right into the all-time high and has been rejected. That that's fine. Does anyone think, like, raise your hand? Does anyone think that Ethereum is not going to make an all-time high? I certainly do, with the dynamics that are taking place on the demand side. And obviously we have Tom Lee right now out there trying to raise $20 billion to go ahead and buy Ethereum. And I think that what are the odds that the US Treasury launches digital treasuries? Everyone's talking about the stable coins. What happens if they launch digital treasuries? And what happens if they choose the Ethereum blockchain to do it on? How has gold been staying overbought for this many months is the question. Gold has now been extremely overbought here since April. And in the longest it's ever been overbought. Ever. You can come back over here to 73. And I mean, 2 months. You're going April, May, June, July, now into August. That's something different. Any way you look at it. And the last time that we were in a situation of fiscal dominance, gold was pegged. So there's nothing to go ahead and look at to say, well, how different is it? But clearly something is happening over here. Gold, by the way, I'm glad you brought that up, because gold is on the verge of what could break down into a sell impulse. So watch that purple line, Ace. Let's go ahead and set an alert. I'll set it right after. Actually, I set the alert yesterday on I think it was Riot. I don't know if that's for sure. Trying to get a look at this gold and the consolidation. I mean, unbelievable to see gold consolidating here for so long with such strength. And is that indicative of something being different? Well, it's never happened before. We could say that, but it is something. Yeah. Not just Circle too, right? There's quite a few others that have chosen to create their own blockchains for stables. I don't think that the US Treasury is going to do that. What about the layer twos? And for sure there are those that would like that to happen on Bitcoin. And I amongst them. I just don't know that's going to happen. Gold, I mean, listen, we want gold to remain sustainable as well. So I'm any type of, look at that monster. Like, is there any moment here that we should be worried? like a breakdown from here, y'all know how much I was hoping for that pullback towards a little lower than 3,000, and it doesn't look like I might get that opportunity. We might have to go ahead and just get a little creative for a moment. And there we go. So yeah, yesterday I had posted I don't know, one of our charts, and well, anyway, just such good material. I'll wait until we get to it. I'll present it to you lovely. Um what would be super healthy, right? So we have resistance, resistance, resistance. All right. As far as down over here would be, I think, lovely if it were to happen, and super healthy. Below it might not be though, right? Below that might be bad. That's pretty similar to the level that I was just giving out, right? From a different perspective. Very close. I'll keep that there as a guide of what I would like to see. I can't imagine that this RSI is going to remain overbought for so long and continue to extend out. But listen, anything could happen for sure. Oh, look at that little BlackRock at the table once again. The DXY responding, what the DXY is responding to today, and again, much the same way that we can't really assess what is happening with the rate cuts in September, even though the markets are strongly pricing in those rate cuts. And on the CPI on Tuesday, dollar was selling off hard in relation to that. And you could see that we had the secondary breakdown, and then I should go on the daily just so we get the closes over here. Oh, yeah, that's tough. I don't know how to trade that. Come back down to the 8 hour where it's just a little more clearer. Um, yeah, and then today's PPI data, and then this is just pricing in. Oh, maybe they're not going to be cutting in September. It's very difficult to read. The important piece here at this particular point would be the breakout at the outside of the upper channel. That's the only clarity I could get at this point. But that's the strong reaction that we're seeing. I don't. It's not such a big deal. I guess is that variable and changing throughout the day here. It's coming off a little bit now. It was as high as 11% this morning. The potential for a pause now back down to 7. It's all noise. Tomorrow's retail numbers are expected to be strong, which would be hard data not deteriorating. And then obviously we have to move out until we get to non-farm payrolls on September the 5th. And then that week after, we're going to have CPI and then PPI on that same week. This is the week before the Fed meeting. This becomes very, very important. And until we get specifically those 3 data points out of the way, where's PCE, by the way? That's not on my radar. There we go. We have, and the Fed's favorite inflation data point, core PCE, is something that all those things are going to affect what the Fed ultimately decides into December. So we got another round of inflation and jobs data to contend with before we have an idea of what they're going to do. There, it just reminds me of something beautiful. This is great. This is why we work all so well together. But I was looking at Hale Finney's projections for where Bitcoin was ultimately going to and headed towards. I think that's a good one. I'm just going to go ahead and here and drop down some Ed Secoda P&L, and you notice that even though it looks like it's up and to the right, it spends the majority of the time going sideways in drawdown before making those legs up. CTM. So I'm going to go ahead and pull that up, and give me 1 second. There we go. So, I mean, you're talking about Satoshi. Obviously, Satoshi sent the first transaction to Hal, and whatever role that Hal played in the protocol, it was a significant one. And this is actually a week after Bitcoin went live. A week after it goes live, and Hal's thinking about, imagine Bitcoin is successful and it becomes the dominant payment system in use throughout the world. Now that's a particular qualifier, like Bitcoin becoming the dominant payment system throughout the world. And we're a long ways from there. We're that early. Then the total value of the currency should be equal to the total value of the wealth in the world. Current estimates of total worldwide household wealth I have found range from 1 trillion to 300 trillion. I look, intent, like, what is that estimate today? I do imagine it is higher. With 20 million coins, do you wait, guys? There are 21 million coins. Satoshi has 1 million of those coins. Why was he only factoring in 20 million? That's interesting, right? Did he know that Satoshi's 1 million early mine coins were never meant to be used or spent? That gives each coin a value of about $10 million. Even if the odds of Bitcoin succeeding to this degree are slim, are they really 100 million to against one? Something to think about. You might want to get some in case it catches on. That's interesting, though. Why was he only factoring in 20 million coins? Did he know that Satoshi's 1 million coins would never be used, or why? What was going on there? I would like to know more. I wanted to get into, as we're talking about our position, and I was talking about Ethereum, and I got sidetracked over here, and we were looking at making the observation that Ethereum came in there. Big shout out to all the silent majority right here, right now. And, you know, we saw Ethereum giving back a good 4% today, still holding open position well into profit, 22% into profit. Solana taking a hit. Buy side boost crew, though. Not only Solana, the buy side 101, 107, 108, all taking stop losses over here. Just under 3% for BTC 107. Cardano is still in its trade over here, 7% into profit, and Solana. So Solana taking a hit. I just want to jump over to buy side boost, and even though you saw Bitcoin take that 2.8% stop loss, it's kind of neat that Ethereum was running up its allocated to funds and then exiting, taking profit as Bitcoin entered. So it's very strange. Phoenix Fire, even though you're seeing a loss here of almost 3% on Bitcoin, at the same time it was locking in profit from those funds. CTM. So let's just take a look over here at Solana, currently here, entering at an extremely high level and currently eating face right now. We see that Ethereum is still in the market. Sorry about that. I just got distracted. I'm like a little cat today. Bitcoin taking a stop loss on the trade. And I was looking for, and I don't see it, Cardano. So there we go. And Cardano still holding this open trade right now. Strong pause over here at the difference. Anyway. To which dashboard? Was it the Bitcoin? This one over here or another one? No, I don't trade all of the algos. I don't trade the 1 hour on the stocks. I've never traded Cardano, so I don't trade them all, and I don't trade CTM 2.0, the original over here. There's I'm dialed in to how I choose to be. The mean positions dashboard. Dogination. Look, Michelle, tag Dogination. Maybe I think it would be he spent some time here in order to make a contribution to CTM, vibe coding this out, and I think it's extremely awesome and useful. Um, and I think maybe the thing to do like would to be have multiple versions. So maybe, for example, a buy side boost version. This version here, another one just for the 2.0 templates. It's good not being overly busy because we you know. But yeah, like we could work that out. Michelle, tag him in the Discord, Dogination, and that is along those ideas I just shared. I think what we want to do over here, Dogination, Dogination, big shout out. Boop 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 boop. I wanted to talk about volatility, and I started this session off, and I we still have the bar hiding the scale, guys. What's going on today? You gotta love it. You either love it or love it. This is a filter today. We talk about filters. This is one of our filters today. We're filtering out those that don't belong. And if you're here, get on you. Get on you. Let's see. Diminishing vol. Let me take a look at this over here. And guys, I've been thinking about the diminishing downside volatility theory that has been so brilliantly articulated by Jordan, and the impact that it's going to have on the momentum-based trading strategies. If downside volatility indeed goes down, then it's possible that longer time frame and less exit sensitive models are going to outperform more precise ones. For example, it is likely that Bitcoin bull runs outperform the daily or daily outperforms 8 hour thoughts. I mean, lots of good thoughts there. And I imagine if you go to the dashboard and you take a look at how the daily candidates have performed, 8 hour historically tremendously outperformed. If you take a look at Bitcoin on the daily over here, jump over to the strategy tester, and let's see if it's outperforming Bitcoin bull run since 2023. And it's not. Right? So that kind of cancels out, and that's why we don't focus on it, and why this initially was built as a solution for, whether it's the surgeon, the busy mom, someone who only had the opportunity once a day. It came down to, well, the 8 hour is significantly more profitable, and then it comes down to you could just automate the 8 hour anyway, and that's why the daily took less of a love. But it's a great thought process, and ultimately, it comes down to this. So I've been trying to articulate in the beginning why it's not just downside volatility that's expected to diminish. It is upside volatility as well throughout this new nature, right? I don't expect to have so this was like a line. So we have our lines, right? And then we talk about like something like expectations of where like Bitcoin spends its most time, and just looking at price and drawing lines, and then we get into structure. You all know how intricate we got into structure, and it turns out that the structure going back to 2014 and blah, and someone is like, how did you draw that line? I'm like, we just draw a line, and they're like, well, there's like evidently there's like a mathematical formula that 100% confirms what we just did visually. I found that to be fascinating, but I'll show you more about that. You can see that the move above the lines have gotten big, lesser big, and now they continue this long walk across it. And I think that it goes up, and this is a great, it's easy to see right here what could potentially happen if things were to rhyme, continuing to rhyme further. I mean, when I talk about continuing to rhyme, hype phase, definite. The acceleration here in this spot rhymes a lot. Big gap between here and here. The arc, the top, the down, the move up, this is a little different, but not too much. The move up, that like it rhymes, and then especially here, it just rhymes a lot. And yeah, I expect up and downside behavior at certain points, well within this. I think it was someone called it once a walk up towards a million. And point being is that upside volatility is diminishing too, even though returns become exponential. Downside is clearly diminishing in the extent of what a bear market will look like and going forward. But this is apparent, and you could see that volatility during this continued move is, is waning and low. And there's one period that it's similar. We looked at it earlier in the session in 2016 during this long walk up too. And this could continue for, let's pretend this continues for years with occasional spike ups, between maybe 8 and even as high as 10%. That could happen, and I think that's what's going to happen. And if that's what's happening and that's what's going to happen, that what the question is, well, what does that mean for momentum based systems? And we've talked about and we've looked a lot about as things like Bitcoin bull runs and the importance of Bitcoin bull runs, and how Bitcoin bull runs could even outperform something like buy and hold, and by a lot, and not since 2023, as Bitcoin is up and to the right, but right over here in April it was, and if you would have went into a bear market, tremendously. However, Bitcoin, we have this problem, and this is kind of hit on over here with UBEX, like just joining and looking at all of the algos, and it's like, well, how do I decide? Because it's very hard to decide when you're looking at, you know, across the board tremendous results. And we had to solve the question of what happens when, if you could buy the bottom and sell the top, and thus Bitcoin bull runs was designed. However, if you go into the Discord and you look at the Nuggets channel and you look at the performance comparison between all the Bitcoin algos, and you could see that, going back to inception, they all perform tremendously well, and it's very hard to decide which is better, including CTM 2.0 and CTM 2.0 on Ethereum for CTMX. They're almost identical in performance. They're both very, very good. But when we move to the release of V4, it's no longer going to be a question, and the outperformance of where we've taken it is such that it doesn't, like, it's very clear. But more so, and this is the main point, if we continue to stay in this regime 4 years, and this is that very tight price action, happens to also be up only, and then you look at the performance here of Bitcoin since 2023. Now, this is the buy and sell side, though. This is not just the buy side. This is the buy and sell side, and you could see that the outperformance is tremendous. Now, if you were to add a bear market to the buy and sell side, and the 2022 bear market, then at that point, then it's not even a comparison, and you could see that, but it's just buy and hold is 186% versus almost, it's just not comparable. However, what about the buy side only and just during the bull market? So here's the bull market started, and we called the bottom of the bull market. But we had that ability to do. Very few could call the bottom and the top. It's if we take off the short side those trades and we're just looking at the buy side, and this is on V4, and you can see that it's very close to buy and hold. It's the whole time it's outperforming buy and hold. They're very close. You can see the April drawdown of 30%. We've had other 30% drawdowns on Bitcoin. And of course, just the buy side only is going to well outperform during those periods. As Bitcoin's at its all-time high, then it's very hard to outperform buy and hold, but we are outperforming buy and hold. Bitcoin's not always going to be up and to the right. And yes, drawdowns of 30% are expected. Drawdowns of 40 to 50% are well on the table, and anything could happen. So the ability as Bitcoin is up and to the right to outperform it is absolutely unbelievable. You add in the buy and sell side, and you're remarkably beating it. And then the thing here is, yes, Bitcoin right now is at an all-time high. It won't always be, meaning that you never know when you're going to get that correction. And if that correction will be 20%, 30%, 40, 50%, and or greater. So that the answer to the question as far as, do we perceive that we're going to continue to see this diminishing volatility? And I do. And I think that it's at a low right now, in so much that, yeah, I don't think it's going to remain here at 2%, and we're going to get a drawdown sooner than later that's going to kick it back up. But eventually, as you move towards, forget the Bitcoin Act or an adoption of that being passed up, like and you could see it illustrated very clearly, just once again in this particular area. If you break out of the substantial channel to the upside, you will see upside volatility picking up. But I don't think that lasts very long, and I think that there's a reversion to the mean, and then it starts again. Even this accelerated price behavior is still not high volatility on the upside compared to what you've seen during these periods here, when the volatility on the upside becomes very, very strong. So I hope that's very clear. It's the most important part of the session by far. Trying to read this question about the recession. Hold on one second. Let me take this off the screen as we get started over here. And that's only if there's no recession from now into 2030. Well, I'm right now walking past. We're walking to 2028 before we get to 2030. That's still a few years away, 2.5 years away. I think it's a long time. We're working towards 2028, and Bitcoin won't do well in a recession. I can't tell you this though. I know that we just saw a 30% correction on the Nasdaq, and on Bitcoin as well. And I don't know if there's a recession, what that recession looks like. I don't know if it's, what does Powell say? Transitory. Robert, is it going to be a transitory recession? Is it going to be like the last recession in April 2020, that, like, as it happened, price was continuing to be up and to the right? Or is it going to be something like, it's not yet going to be something like the dot-com bubble? It's not going to be the AI bubble burst yet. That could be down the line. You guys ever watch the All In podcast? I don't care what you guys think about politics and all that, but in the All In podcast from this week, they're talking about, like, it's a bunch of tech guys, and then I think his name is Ben something from the Daily Wire. And he's not, like, this is not his thing. And he's just like, I don't understand. They're spending all of this money, a ridiculous amount of money. Like, is it going to have a payoff? Or, like, you know what I'm saying? He has a very good question as an outsider. And they're all like, yeah, of course. And they're big investors in the space. could this all come crashing down at another point? For sure. But right now and today, money's being spent. And that money could, like, there's a reason Nvidia is valued where it is today. Um, I'm trying to talk about recession. I don't know what that recession looks like. And if there is a deflationary debt spiral, this is going to look bad and be bad, and it's not going to go well. Do we see that happening right now? No, we don't. That's not the macro could change rapidly. The first time I brought that up to you was in July of 2022 when inflation was 9.1% and everyone was freaking out. And we called the peak of inflation. We called the very print. I was right here where I am today as we did that. Um, but I don't know like in the past 100 years, there's never been a correction of 20% or greater in the Nasdaq that's occurred within the next 11 months. So is this time going to be different? It could be. There's many difference in first times, but the probabilities don't suggest that we're in for a big correction over the next 12 months. And, or I should say 11 months. And do I think Bitcoin is gonna, yeah, it's not what's happening right now. It's not the base case that we're seeing. Markets are at all-time highs and for a reason. And looking forward, it's hard to see something that should change our current perspective that Bitcoin is going to continue to trade within the sustainable channel. We know when it breaks down, we know when it breaks out to the upside, but there's nothing to suggest that anything should change soon. And it's hard to say if the US enters a recession, what that recession looks like at this particular time, at a particular time when spending is essential, that the government needs to spend and spend and spend just to maintain its own spending. It's a complete doom loop over here, and it's just going to add to more and more debt. We like RTA, which I happen to think is exceptional, and our macro view, which I happen to think is pretty great, is all for fun. It doesn't even matter. We have methodical, mechanical systems and strategies we trade that outperform the best of the best. The best of the best is Ed Seykota, right? And you have him over here. Ed Seykota is the best of the best. Renaissance Technology is the best of the best. If you look at the best performing hedge funds from this current year, last year, they're a joke. It doesn't even matter. The best, like the best of the best. Warren Buffett, 34%, annual compound. No, like that's who our competition is, and it doesn't matter what the macro and the TA are for fun. We have a love for it and a passion for it, and we want to get better and better. But we have mechanical strategies with an enormous edge to help us to go ahead and build the future that we want. No doubt. And people continue to feel it. All right, y'all. Have a beautiful day. Have a great day, everyone. God bless you. I'll see you all tomorrow.